Okay, good morning, everybody. If you can hear me, okay, just drop a yes or a Y into the chat box just to let me know that sound is working through okay, and we'll make a start. Okay, so welcome to the live stream midweek market update for this week. Let's have a look at the disclaimers. If I can ask you just to take a few moments just to read through these and make sure you're comfortable with them. In brief, we're not licensed to be able to give advice on the markets. The markets that we're going to be looking at today are going to be purely for training and illustrative purposes only. So please make sure that you're comfortable with these terms before we continue. So let's just take a quick look at a quick rundown of the environment that we're in this morning. We're in the run-up to the US presidential election, and what an interesting election it's going to be this year. There's no doubt that the impact of that is having some impact on the markets, and we're seeing a lot of fallout from that being priced in. We've got the virus infection numbers, which are increasing this morning as well, or not just this morning, but they're increasing across the Northern Hemisphere, Europe, and the UK, and across America as well. So that's having an impact on the fear of this second wave. And then on top of that, just to add a cherry on top of that, we have the US and China trade talks, which are still progressing. So the outlook is looking wonderfully rosy for the markets, isn't it? There's certainly plenty of things there for traders to be concerned about, whether that be to sort of look for positioning or looking for liquidating into cash. And I think there's evidence of certainly quite a wave of cash positions at the moment. So let's have a look at a few markets here. And again, I'm going to ask you, I mean, we've got quite a few people in the trading room in here. So good morning, everybody. If you're seeing any markets that we should go and take a look at, then post those into the chat, and we'll take a look at those. Providing I've got data for them, of course, we'll go and have a look at those live. As we know, Fergal's off sunning himself this week, so we haven't got him busy scouring the markets and with his beady eyes on it as well. So we're going to come and have a look at oil first of all, because we took a trade on oil and this week, and also discussed it in the newsletter at the beginning of the week. And there's a couple of reasons really as to why we were looking at oil and why we wanted to take a trade on oil. One of the main things is that, well, for quite a while now, since the massive recovery here, since the famous oil crash, the market's just been capped around this sort of $40 to $50 dollar level, I should say. It's really failed to sort of get past here, and now we're starting, and it's been stuck in this sideways consolidation for a long time, and now we're starting to see a break to the short side of the market. Now, oil, from a sort of a fundamental perspective, is, you know, I was looking at this sort of week simply because when the markets were down here and oil prices were next to nothing or even negative, there was a huge amount of supply that was sucked up by forces that needed oil. You know, particularly the US. They filled all their stocks up with oil, which means that now, well, they don't need so much. And of course, with what's been going on in the world, with everything slowing up, less vehicles, less aeroplanes, less everything, there's not so much demand for oil. And of course, that's going to put pressure on the prices. Now, this is never going to be an easy market to trade. We've already had warnings a few weeks ago from Saudi Arabia saying that, warning traders fearlessly not to drive oil prices down, and they will, because it is a manipulated market and they do manipulate the prices. So, that said, they can't sort of control the demand if there's no demand there. So we're starting to see a breakdown here. Now, I'm not suggesting that the market's going to get all the way back down here to 20 even, or back down any sort of further. But we were looking for some opportunities for weaker oil prices. And if we come here to the daily time frame, we saw evidence here of the market started to roll over. And our key for this level, as we discussed in the trading room, was that $39 level. And we have a look at this, you can probably see this a bit clearer on the 4-hour time frame. See if I can get some greater perspective of it. You can see for a long time the market was above that $39 level. This is the $39 level, this one here. And we got the break below that. So what we managed to do was to capture this on a 60-minute chart, and we got a 2-to-1 target out of this. Since then, the market, I was looking for this to continue further. I thought we might be able to sort of weather the retracement, but the retracement actually took us back beyond 39. And the setup actually did bracket the $39 level. So it was really a nice setup. I was happy with that. But it was a 2-target play. So the question is now, what now? Now the market has now moved down to our ultimate target, which was that $38 level. And we're sitting at that, well, just below that price point at the moment. From a technical perspective, things are still looking weak on this market. We've still got convergence on the indicators. So again, some sort of play around that 38 level could be something that we could start to look at. Again, if we look at this from a technical perspective, where's the structure for the next sort of trading window? And I think even if we're sort of rather conservative, we could be looking in here, which is just below that 37 price point, $30 to $37 level. So again, there's still quite a sizable sort of trading window to the short side here. So again, let's have a look a little bit lower, and let me just sort of zoom into this a little bit. So this is now the 60-minute chart, and we can see our $30 level here quite clearly. We've had a big sell-off as the market's punched underneath there. Certainly looking quite overextended at the moment. So some sort of retracement back into 38 could be something that we're looking at. Now, what I would look for here is, because we've had such a strong move short, the geometry is miles away from 38 at the moment. So what I would look at is some sort of retracement, and then perhaps a pause here, perhaps a sort of a rollover, and then seeing if we can get some sort of positioning to the short side. So I'm still liking oil short, but again, it's just sort of timing here for positioning. So I'm just looking at the sort of questions. Morning, Phil. Morning, Michael. Sure, we can. We'll take a look at cable. And Gordon, morning. Okay, let's just come down on the time frames just a little bit more here on oil, and I just want to mark a sort of fib study in here. See what lines up with that 38 level. Now at the 38 level, we've got a 38% retracement fib level. It's not the sort of trading fib level that I like to incorporate. So I like the 50 to the 61.8. We know that that fib zone is our favorite zone. So again, that's a little bit above price. So again, let's see what develops. Let's see what sort of sets up here. We could actually get a break higher above the 38 and then sort of a swing down and then maybe a breakout on that 38 price point. Okay, so let's take a look at what else is going on now. Let's go and talk about the stock markets. We'll take a look at the Dow here. Stock markets looking particularly weak now. They've had a strong move short, and the big level that I've mentioned a few times here on these markets, particularly the Dow, has been that 27,000 level, and the market's now just punched underneath there this morning. So it's thin trade, it's Globex trade at this morning. The fact the market's now around this sort of price point just highlights we're at a key decision point area. And obviously two things can happen once the US comes on stream. We could get a bounce off here, or we could see sort of continued weakness, and then we've got trading windows to the short side on this market. It doesn't to me look like we're going to see a bounce off here and a move to the high side and rally to these highs. I don't think we're going to see that this side of the election. It's going to need something pretty fundamental to create that. Maybe some sort of election win might do that for somebody, but at the moment I would probably be expecting just some kind of bounce and then sort of further weakness. If we come and have a look at the daily and sort of zoom into this, we can see we've had some solid sell-offs here, and again sort of further weakness on these markets. So what we on the Dow Futures down about 1.5% at the moment. The futures sitting at were just shy of 50 pips under that 27 level at the moment as well. So this is the cash market that we're looking at. So the levels are slightly different, but solid sell-off here. Let's have a look on the sort of lower time frames. Again, some sort of opportunity, perhaps back into geometry. So back here, we need some sort of retracement, perhaps on the on these lower time frames. Indicators looking sort of still weak. So from that perspective, we're still looking okay. We come down to perhaps the 60-minute chart, and again, let's just start to see what our fib studies. So we've got a level in here around 27 sort of to 30 to sort of 50, that sort of area. That's not far off the 61.8% fib retracement level, and it sort of coincides underneath here. So maybe some sort of retracement back into this sort of zone, back into this sort of level, back into the geometry zone with the moving averages as well. Could be something we could look at, maybe on the 15-minute chart perhaps, as sort of maybe some sort of positioning to the short side. The sort of bigger picture here, I'm not particularly blown away with this sort of shelf type price action that we have. I prefer this sort of retracement swing here. So this is the nice swing, this point here, but we haven't got any kind of retracement back that far at this moment. So let's come back and take a look at some of the other related markets. So we'll have a look at cable. Now the big levels on cable, of course, have been the 130 level. So that's just around sort of where the market is at the moment. So it's not far off there. And cable's just sitting on top. In fact, it's just broken through that that 130 level this morning. So let's just mark my level into that sort of, it's just here, so we're just underneath it at the moment. So I mean, this is the key level for this market. And obviously, one of the things that's really driving this at the moment is the trade talks. That's likely to be the big impact on this market. Let me just change that to yellow so everyone can see it a bit more clearer. So there's been some significant support and resistance. It's a significant structure, that 130 price point. Again, we were looking here as to potentially, whether we're going to get a bit of a move on this. And the challenge really with this one is that when you start to come down the time frames, even though it looked nice on the daily time frame, it looked nice long. When you start to come down the time frames, it looks more bearish on the lower time frames, particularly now that the market is now underneath 130. So down to the 4-hour chart, we can see the more significance that the market's now underneath 130. And the level that I've got in here as the next sort of structure point is down here. It's just around that that 129 level. So just north of that 129 price point. I'll just sort of zoom out of this. You can see a bit more significance of the 129 sort of price point. And each time the market's bounced or tested 129, sorry, it's moved to 130. You can see this all the time, whipsawing either way. So it seems to be a fairly sort of decisive move between these two price points. So at the moment, the market looks like we're on the way to the short side here, down to 129, and that means that we're going to need to see something rather significant that's going to stop the market from testing 129. So some sort of significant announcement perhaps might do it. That can always happen, of course, with trade talks, but are we likely to hear that in the next sort of few days? I don't think we'll sort of hear anything on those for a while. So again, look for further weakness in this. Great British Pound is weak today. The dollar is strong at the moment, so it's supportive here from a strength and weakness perspective short. So we can see we're getting a bit of a move on this now. So let's just come down and see if we can see any sort of potential setup. So I mean, at this moment we don't have any sort of fibs sort of helping us until the market sort of moves down a little bit further. But we'd need some sort of a move further down for a retracement back in to get some sort of cluster with the fib zone back into that sort of 130 price point. So we're a little way from that at the moment. But I think that's certainly something to keep an eye on. At this moment, there's no setup on this. Now, others that I was looking at this morning were some of these dollar markets, and let's have a look at our dollar yen. The dollar yen's had a been in a long-term short trend here, but it hasn't been the easiest of markets to trade because the strengths and weaknesses have been equal between the dollar and the yen for much of the time, and that's why we haven't had any smooth price action. It's been quite a battle for this market to move lower. Having said that, it's you can see who's winning here. And it's certainly not the dollar. Both markets are strong this morning, but the yen is stronger. And again, here on the daily, we can see that these price structure levels have now been sort of taken out. So this lower level, the market sort of took this out yesterday. It's now the next sort of price point down here is that 104 level. So if I just sort of zoom back out of this, you can see down here 104 is the big round number, and that's the sort of trading window that we're in. So what I was looking at earlier is if we just come down the time frames, you can see here on the 4-hour time frame, we had that extended move this morning, and now we're getting a bit of a retracement. So again, if we come to the 60-minute chart, this was the setup I was looking at. So I mentioned this in the trading room. The Morning Post this morning, that from a trend structure, we've got a high, we've got a low, we've got quite a nice trend formed here now on the 60-minute chart. So some sort of retracement here. We need to find a lower high. We're back into the moving average zone now. So let's mark our fib study in, and we can see that with our level in here, the breakout level clusters with the 61.8% fib zone, fib level, and that's the most significant for a potential sort of turning point. So market's just coming back into this now. So it's looking sort of quite nice. I can also tell you that we've got a smack the market's pivot point in here as well. So that's just around where the market is at the moment. So that's coming right into that zone too. So we've got quite a cluster of analysis setting up in this zone on dollar yen. So in the trading room, we'll certainly be looking at trading opportunities here, and we'll see how that matures. Now, on a similar theme, we also looked at dollar Swiss. So let's have a look at dollar Swiss. Now, this market from a macro perspective doesn't look sort of quite so attractive to the long side because, again, the major trend here is short, and we have a look at this on the daily. We can see that we've got support down here where the market's clearly found significant support before, but we're still in the context of a short trend on the daily. We've got lower highs forming here, but this is quite a powerful move. And the other thing that we've got going for dollar Swiss at the moment is that strengths and weaknesses are supportive of this long today. So that's why we're seeing such a strong move. So what I was looking at is if we come down to the sort of 4-hour chart, we can see price action here is broken out of the structure on the 4-hour chart. So that's the first thing that I look for. We've got a equal low or slightly higher low here. Now the market's broken out of here, so we've had a clear sort of double bottom and a break of the neckline, and now the market's moved higher. So we're in a trading window here. If we just mark in a bit of structure in here, you can see that we've got previous support and resistance above price. So we've got clear distance to get there at the moment. Still got some movement to the long side. So this is around 9130, this level up here. We've got strong momentum in the indicators, so they're looking good as well. Let's come down to the lower time frames here. Okay, let's just come back a bit. So we can see the trading window that we've got in here, and this level on the lower time frames where the market found key resistance a few times before. It's also found support here a number of times before. So that's the previous support and resistance structure on this market. So let's just see what we've got here. So again, let's zoom into this. We can see the breakout level here, and we've also running a fib study into recent price action that ties up with a 61.8% fib retracement level. So we've got a fib level in here. We've got the moving average zone in here too. Here's our 10 and our 20 period moving average. So that's clustering with the level. I can also tell you that we've got a smack the markets pivot point in here too, at this level too, bang on the level. In fact, the pivot point is at 91.059. So we're almost right on that fib level. So we've got a cluster of things going on here. So if we see weakness and we see a retracement, bearing in mind these markets are looking quite stretched at the moment. So if we do get a retracement in here, then there's an opportunity. That's the sort of zone that we can start to look for positioning. Now, with this, let's talk about trade management on this. If we got that, let me just zoom into this a little bit more. Here we go. So if we did get a retracement back into that sort of level, then we've got fair distance there to that for that trading window. So again, there's I'd be looking at possibly managing a trade up to here. That means covering risk and booking profits at 1-to-1, or being able to move the stop. But I don't think we'd be able to move the stop off this sort of price point here, not unless we get another higher low formed here too. So we can either sort of take that as a 1-to-1, or probably get multiple targets out of it if we manage the trade. So that's dollar Swiss. What other ones have we got going on this morning? So of interest, let's have a look at our Aussie Swiss. It's been on our watch list here for a while. Because Aussie Swiss now has retraced back to the breakout level. And you can see this here on the weekly. So this morning, Aussie Swiss, the strengths and weaknesses weren't supportive of, they were supportive of a move long on Aussie Swiss. And that's what we've had. We've had the move long. We're seeing now that the Aussie is not quite so strong. It's actually rolling over to be seeing some weakness in here. And the same with the Swissy as well. So the Swissy is not as weak as it was. So we're seeing some movement in the strengths and weaknesses. This could be sign here to look at, see what sort of evidence we've got for positioning if this market rolls over. So again, we come down to the daily time frame. Let me mark in, change our level to the brighter color. So we can see that price is now pulled back to the breakout level. It's pulled back into the geometry zone as well, and we've got clear direction and trend here on the daily time frame. So we've got lower highs and lower lows. So we're certainly in that turning point here. Indicators still looking bearish, so that's looking good. Let's just come down to the 4-hour time frame. We're starting to see some evidence here of weakness. Now the market's coming into that level, and if we come down a little bit further, we can see that again here as well. So I think there's going to be sort of a key decision point here, obviously, that the market is up against. Prices have just come back into the moving average zone on the 1 hour. We might sort of get an attempt to move higher again, and if we get a rejection of that, then we're going to see a double top in here. And if we see a double top and a rejection of the double top, then there's a sign of weakness starting to come into this market. So we'll keep an eye on this and see how that develops. But at this moment in time, the price has brought back into that price point. So it's worthwhile keeping an eye on that. Now, similar to Aussie Swiss is the Aussie Cad. Not quite the same structure. I think I prefer the structure on Aussie Swiss. But again, on Aussie Cad, you can see that the market's pulled back into the level on the weekly chart. In fact, this one's just it's sort of pulled slightly above the level, so it's not quite as clean on as the Aussie Cad. But if we have a look at this on the daily, again, if I mark a level in here, you can see that you can see where the price is at the moment. So we've come into these lows, pulled back into these lows, and now we're starting to see some evidence of some weakness in here. So it's quite a structure point through here too. Now, if we're thinking of weakness coming in on the Australian dollar, then we could have a look here at Aussie Yen. So again, probably some more evidence here that there could be some weakness creeping into the Aussie, and Aussie Yen is also starting to look rather bearish now. So on the weekly, we've now started to get the rollover. We've got a level here that price action's just broken. I think it's just about broken. So again, let's just take a look at and remind ourselves of the structure here on the higher time frames. So the macro picture here looking decisively a good structure point through here that the market is now just breaking through at the moment, and that does open up a bit of a sizable trading window to the short side. Even if we start to, I'm just sort of wondering, even if we're starting to maybe even come down to this sort of area here, well, there's still a huge distance, and that's what, around 73. So still a huge distance to the short side. If we come down and take a look at this on the daily, so here we're into a daily, into a nice level through here on the daily. This is the level I was trying to sort of talk about. It's on the on the weekly time frame, but you can see it more clearly here on the daily. We're already in a downtrend on the daily as well. Indicators looking weak, and again a move short. Let's just mark in where our next sort of structure point really is, down to these lows down here, and we can see we've got quite a reasonable distance to the short side here. Let's just come down to the 4 hour. So just zooming out of this, just to sort of get some sort of perspective of structure, but you can see it's looking sort of quite nice there. So how could we play this? If we come down to the on this time frame, we could probably tighten that up very slightly, and to coincide with these tests here. So we've got 1, 2, 3, 4 tests of this level. Now we've got the breakout of it. Again, there's a bit of a move down here, and I think that it's not easy to actually sort of play this. You can be looking at stops above these highs, and that's a bit too far away. So the sort of strategy I'll be looking for here maybe is a push down and then a pull back and a rejection of the level. It's such a significant level that the market's tested it multiple times. We'd expect the market to come back and test that level or kiss it goodbye before continuing. So again, that's the sort of thing that I look for here. The alternative might be, if we can't get any more push down on this because of the market's already advanced already, then you might sort of get a consolidation here. And if we get a consolidation and a tighter move into this level, then there could be a perhaps another breakout opportunity as well. Okay, so let's have a look at euro dollar. So I'm not sure who's I haven't got a name, but someone's asking for euro dollar, so let's have a look at euro dollar. Euro dollar's broken that 118 level this morning. Or was it last night, actually? So the challenge really with euro dollar is that from a higher time frame perspective, this is a bit sort of challenging where it is from a market structure from these higher time frames. I think the pressure on euro dollar is to the weak side, just from a fundamental perspective with the euro. They've really got to go back to the drawing board with their sort of stimulus packages, and I'm expecting that that's going to have an impact on weakness here for the euro. So we got underneath that 118, and that's the, again, if I just brighten up some of these older levels. So our 118 level here has now sort of been taken out. The challenge with this market has always been the trend structure here, and what trend structure. We could say roughly we've got maybe some sort of long trend forming here, but what I can see is that there's significant resistance every time the market gets up here to 119 to 120. There's significant resistance. There's significant support in here too, around not far off actually these 117 sort of price point, 117, 117 and a half. You can see that there's been significant support as well. So that's sort of helping the market keep pegged between these levels and keep it consolidated here for a few months now. So we're seeing a move off this since the market's taken out 118. It's down to what, 117 and a half. I've got a mild level marked in there at 117 and a half, and then the main level, main structure point down to 117, which is down here. So again, we could come down to the lower time frames and start to see if we can see any sort of opportunity for maybe a trade between 117.50 to 117. The 4 hour does look a little on the stretch side, so maybe a retracement here and for a retest to 117.50. Let's just see what we've got lower down. So this let's just see. I mean, lower time frame structure would be looking at. So I suppose if we got some sort of retracement back into the fib zone, the difficulty with this, the one thing I'm not too keen on is if we look at price, it's come down. We've then had a shelf and then a move down, whereas the best structure is to run it from the high here. So if we run it from the high there, we're going to need a much deeper retracement. If we look at price, it's moved down already to this 117.50. It's then bounced back, so we've almost had the pullback already, and now it's weakened off again. So I think this one, whilst I think it could move down to 117, I think it's trying to find an entry is going to be a little bit more challenging. Possibly an entry around the 117.50 if we can get maybe a move down and a pullback to 117.50, or some sort of entry around here on these lower time frames might be something to keep an eye on. Okay, so we're killing the time today, but never mind. So if you've got anyone else got any markets that they would like to take a look at, let's pop them into the questions box or the chat box now, and we'll take a quick look at those. Okay, so just while we're looking at that, what I'd like to say is if you like these events, then please give them a thumbs up. You can also subscribe to them on YouTube, and if you hit the notifications button, then you will be notified of future events that we run. So we're planning to run these on a Wednesday morning, and we will be running other live events as well. So if you're not part of the trading room, then subscribe to the YouTube channel, and that way you'll keep notified of the events. You can also actually come across to the Smack the Markets website, and you can also, if you subscribe to the newsletter there on the, so if I drag the website across, if you come across to the contact tab, sorry, not the contact tab, home tab. If you scroll down to the bottom down here and just join the mailing list here, then you'll get notified of the events when we run them as well, because we'll post them out in our to our subscribers and our newsletter subscribers as well. So that's another way to get notified of these. Okay, so let's start to wrap this up now. thank you very much for joining. I certainly hope it's been helpful. I hope it's been useful as well. And I certainly look forward to speaking to you next time. Okay. Thank you very much, everyone. And bye for now.